Morning and welcome to Money Matters only on OneDealAway.com. I am broadcasting live from New England in the United States, of course, at 7 a.m. every single morning, including today. And today is Sunday. Believe it or not, it is Sunday, July 12th. And here we are, middle of the month, just about. And today's news is going to be quite interesting and important. We're going to be talking and focusing on crypto. As you know, I do personally believe that crypto is the future when it comes to the financial system. Now, of course, that is not a financial advice of any sort whatsoever. It's just my opinion based off of information that I have and have been able to glean and based off of things not changing. But as you know, in the world of economy, finance, and of course, crypto as well, things are always changing, always shifting, always transmuting, so to speak. And so, what is true today might not be true tomorrow. So, it is important for all of us to pay attention to what is going on in the world of crypto, in the world of economy, in the world of finance, and to really be ready and prepared for not just what's here right now, but also to what we can expect is going to come into the future. And today we're going to talk a little bit about, obviously, we're going to take a look at the market and see how things have been performing. There's some interesting news that have been developing. Most of you, if you're following crypto and crypto enthusiasts, are probably fully aware of what's going on in the altcoin land, so to speak. But we're going to be talking about what's behind the scenes of kind of why some of those things are transparent because you might have been hearing about the names, you might have been hearing about the prices, but what's behind it? Like, why are things happening? What are some of the challenges? And of course, this episode is themed Ethereum. ETH could be one of the best investments you can make. And or is it possible that that could be the case? Let me know what you think in the comments. Let me know what you think in the chat. If you're watching this live, good morning and welcome. We're going to hang out and chat at the end of the show as always. And if you're watching this on YouTube or any other channel, do me a huge favor. Hit subscribe button, hit the bell button, and do hit a like button if you don't mind so that you can help algorithms help me get the message out. So there you go, a little bit of a good deed on your behalf, and I thank you in advance. So let's do this. And good morning, good morning, good morning. Welcome, welcome, welcome. Super excited to have you here. Let's get jumped into the news. We're talking about Ethereum predominantly because for many of you, you might be very, very new to crypto. For those of you that are super familiar with crypto, this is probably going to be boring. But you know, you could find some great golden nuggets in this show as well. And those of you that are new, you're going to get a whole bunch of nuggets right now. So we're talking about Ethereum because a vast majority of stablecoins, altcoins are created on Ethereum network. Now, of course, it's not the only network where you could do that stuff. There's plenty others. But when you look at the number of coins that is created on Ethereum versus any other network, as of right now, Ethereum is leading. And that is why we're focusing on conversations about it. So we have a little bit of a downer news, as I like to call it. And it's sort of Ethereum is facing unreasonably high transaction fee. So as you might be aware, every time that there is an exchange, so to speak, utilizing smart contracts. So all of the altcoins, all of the stable coins that are created on Ethereum network use, Ethereum. They have to use ETH and they have to use these things called gas prices. And gas price is basically just an easier way to connect the smart contract math, right? What the logic that has to happen behind it with ETH. And so instead of putting in an ETH, they put in a gas price, and then the gas price fluctuates up and down. We talked about it in one of the previous shows, but just in case you haven't seen it, wanted to do a quick recap. So that's one of those things that when ETH transaction fees go up, it has an effect on the altcoins and stablecoins that are built on the network. So let's take a look at the news. Unexpected price action has been noted in the crypto markets over the past week. Bitcoin, not a whole lot of happening. We're going to take a look at a market in just a moment, but I wanted to start with this news, and then we're going to go into the other stuff. Many altcoins saw their price surge independent of the king coin, Bitcoin, and Ethereum too reported a strong market sentiment. However, there are some challenges present within Ethereum network. A spike in terms of addresses and activity on Ethereum's network, users are now faced with unreasonably high transaction fees. Miners have collected over 2,500 ETH a day in transaction fees for the past month. So congrats if you are a miner on ETH and you're making 2,500 ETH. And, Ethereum price is about $200 plus minus. We're going to take a look at the price. So you can easily do the math and see whether mining ETH at this moment or at the moment prior to this article, because that's already history, was profitable. I would argue yes, but what do I know? The persistence of these high fees come in as spite of the introduction of a vote amongst Ethereum miners to increase the gas limit each block from 10 million to 12.5 million. The proposal was successfully voted on and passed on June 19th, giving the network more transaction capacity. So they basically increased the block size and they increased what transactions kind of go through. And while that is good, the problem is that the prices are still pretty darn high. The average gas price increased from 11.6 Gwei in January 2020 to 47.5 Gwei at press time, a 309.4% increase. That is a huge increase in anything, especially when it comes to prices. And so now let's jump in and take a look at the market and take a look at the prices. As you can see in the top 10, mostly, everything is green, but not a whole lot of movement happening. And as you can see, Ethereum is at 240. So it's not 200, it's 240. So do a quick math of 240 times 2,500, and you can easily calculate the amount of money that the miners are able to earn these days on ETH. Let's see where we are, what's going on, who's winning, who's losing. As you can see, Bitcoin hasn't moved much. We're at 9,275. So we've been flirting between 9050-ish and 9300, for a while now. So mostly a snooze fest. Not much happening. XRP has climbed up for about 18 cents to 20 cents. So congrats if you made a little bit of money. Cardano is number 17 now. Let's see. Binance coin is up 7.9%. But let's take a look at the change over 24 hours. And let's see. Who do we have? Ampleforth is up 28%. Aave, 20%. iExact RLC, I have no clue what that is. 18.9%. Hyperion, 15%. Kava, 14. Bitcoin Diamond, 10. Theta, Theta. sometimes the TH doesn't quite work in my mouth. It works in my head, but not 9%. Ontology, 7. So, all right, we have definitely some altcoins that are doing incredibly well. Let's see what's going on. The biggest losers, as they say, Stratus, Bancor, Elrond, Eunice said Leo. I have no clue again what that is. Yeah, but it also has super small volume, so maybe that's why. Stellar is down 2.7%. So as you can see, even with the losses, it's not been a huge losses, and most of the ones that are in losses have like super tiny volume. So Verge has been been on the news, so to speak, even though it has a ridiculously small volume. But some of these, I'll be very honest, I have no clue what they are. I mean, there is thousands and thousands and thousands of coins, and I could be diving into each one of them, but it's nearly impossible to do that with the thousands of coins. So, I think it's important to kind of take a look at some of the ones that make sense. So today we're going to be discussing a whole lot more about Ethereum, what's working and why. But before we do that, a sip of water, slight change of pace to see what's going on in the news around the world when it comes to crypto. And then I promise we're taking a deep dive into uh, Ethereum. All right. So South Korea. Interesting news coming from South Korea. And South Korean province mulls local stablecoin power to power universal basic income. Now, I have been talking about the fact that many places will start considering universal basic income. Many places already have it. Some is implemented into unforeseeable future. Some have implemented it only for X number of months, and some are not even talking about it, or if they're talking about it, we don't know about it. It's not public yet. So, what is going on in South Korea? Governor Gyeonggi Province Gyeonggi Province? I don't know. Let me know how you pronounce this. South Korea's most populous province has suggested launching a universal basic income funded by local stablecoins. And this particular province, it appears, is a home to quite a bit of tech. It's kind of like a tech hub, and so it's there's many stable coins that are being created, and so what they're looking to do is that government is already pioneering a form of basic income payment to rural communities that it has been going rather well over the past, I want to say, year or so. They've been doing it, but now they are wanting to push ahead with the plans for universal basic income rollout that would make use of existing or new stablecoins in place of fiat. The province is set to issue some $1 billion worth of tokens this year, and 68% of the residents and 63% of the companies that are based in a province say that they approve of the existing stablecoin projects this year. This would be very, very interesting, and saying it would likely need central government approval for the projects of this scale. But Seoul has previously indicated that it is prepared to weigh up the arguments for UBI, and they're debating whether that is going to be issued. So that's an interesting piece right there. So we've been hearing about the challenges with the US dollar kind of being used as a weapon from country to country. We've seen that there's some challenges with the Hong Kong and China. We talked about it this week, and I have been talking about how many places are looking for different ways to step away from the dollar, step away from the fiat. And my understanding and my belief was for quite a few years that this part right here, what we're just talking about here, that is going to become a reality. And of course, it's just starting for a province. It's starting from small countries. It's starting here, it's starting there, but it's starting to trickle. And as it trickles, it has an ability to trickle down, trickle up, and make much more use of what I have been talking about, that it has a strong potential that is going to happen. So we also have other news, and in other news, we jump from Asia to Europe and we go straight into EU. Lithuania's central bank is about 1 month away from minting money that is too advanced for nearly anyone to use. What they're doing is they're actually been playing around. Lithuania has been playing around in the cryptocurrency, in the blockchain. They've been on the test net. They've been testing around all kinds of different things. They created this giant project where they're going to go in and play around to see how they can get off of fiat and onto blockchain and into crypto. And so this article talks about not just sort of what they're doing right now, which is this money that is too advanced for anyone to use, but they're also doing some additional pieces. Now they have started to play around. They're issuing a digital currency on the NEM blockchain, NEM blockchain, and it's NEM is kind of like Ethereum blockchain, except it's not on Ethereum network. It's on NEM blockchain. So the Bank of Lithuania is issuing LB coin tokens, a commemorative digital token exchangeable for physical legal tender. And it's planned for July launch following more than 2 years of blockchain experiments by the Bank of Lithuania. Now, in addition to these collectible cryptos, blockchain sandbox LTChain demonstrated how Lithuania can foster and grow fintech startups. We're going to pause here for just a moment. So, what they're basically issuing right now are numismatics. If you are or have been a coin collecting aficionado, which I have been since I want to say I was 6, 7, 8, something like that. Since I was a kid, I've been fascinating with numismatics, with coin collecting, and have been, always, wherever I go, I always, such a geek, y'all. Wherever I travel, I always go into the numismatic shops, coin shops. I always look at the coins, and I always look to add to my collection. And, it's not this like, billionaires collection of super rare $100 million price per coin and having like 100,000 of them or anything crazy like that. But I am just enamored with the whole thing, and I like old coins, and so this is kind of interesting and exciting to me that they would be issuing collectible cryptos. Now, I don't know if I'm as crazy about collectible cryptos. The reason I actually like the physical coins collection is because they're from like 1600s or 1400s or like Roman coins, right? And the part that is exciting to me is the potential story that this coin might have, the potential thought of, who else could have held this coin and what could have been used. Because the coin that I am holding on to been used to buy somebody's first home, or maybe that was a coin that they used to buy their first cow or a crib for their baby. So those are the things that are interesting to me when it comes to collecting the coins, the stories behind it. So I don't know that I'm as excited about collectible cryptos, but who knows? I might change my mind in the future. Right now, it's not as exciting because they're just being issued right now. So I'm like, whatever. Nobody owned it before it was just created. But who knows? I might change my mind in the future. But I think what they're doing right now is very, very interesting because, it's sort of a case study into what the Bank of Lithuania, what countries are doing, what banks are doing, what central banks are doing to actually drive this sort of piece into happening. So they want to pitch Lithuania's ministries of energy and health on a cross-agency multi-blockchain platform called LTChain that the whole government could use. This is the part that is very interesting to me personally, because what it does, it allows us to then really think through of, folks are using, banks are developing this stuff, and it's going to be not just sort of the bank itself, but it's going to potentially be national, or even, if we're talking about Europe, it could be EU as a whole. And so if we're talking and thinking through the actual connection of European nations, so to speak, now we can really talk about the connection of European nations, because if you think about it, they're going to use all the same blockchain, potentially. I don't know if that is going to happen, but I could see unification happening there. Let's continue with Lithuania's bank and what they're doing. Now, LTChain has 11 participating fintechs that build blockchain-based applications for the financial sector. They have a digital private bank, created a credit default swap lines, insurance and smart contracts, digital bond buying platforms, and a shared Know Your Customer platform promised to get clients to be able to move from one bank to another very easily, which is a win for customers But the commercial banks are not happy because they are fearing losing accounts to competitors. But this is the part that I was telling you about, that some of these changes are going to happen. What I think we're going to see central banks launch these centralized blockchain technologies that are coming out of central banks, and is basically going to make commercial banks a thing of the past. Because why would you need them, right? Why would you need them? They're just a cog in a wheel, and if we remove some cogs, those wheels could go bigger, which means they go faster and less things break. Again, that's just my thinking. I don't know for a fact what will happen, but it is going to be interesting. Now, Lithuania's blockchain future. They have a three-phase. They have completed basically a three-phase research state now. The bank is now looking into expanding the trial for wider use across Lithuania's IT structure. And what they're looking to do is, of course, go into the system, into the tax authorities, into energy, into health ministry, into the whole 9 yards. And they have been actually playing in the sandbox. Sandbox, for those of you that don't know, and as you know, I'm getting into the tech world, and so I'm learning slowly but surely, not just kind of what things are, but how they actually work and how you build in it. But Sandbox is basically like a playground. It's a test environment where you can deploy very much realistic things, but it's not live on the net. And when we're thinking about cryptocurrencies, it lives. A lot of people call it either a sandbox or a test net, where you can go in and play around with fake money. It's kind of like if you read Robert Kiyosaki's Rich Dad Poor Dad, and he talks about that he learned how to invest in real estate by playing the game of Monopoly. Game of Monopoly would be an example of a sandbox or a test net. Whereas going out there, right? And then the reason for that is because you're playing with the fake money, you're playing with the fake little houses, you're going around the board, but the concepts are the same of how things work. If and when you go in and transition into the physical world, into the real estate world, where you're buying an actual house that you can go into and live in, then that becomes sort of the main net. That you are out of the sandbox, testing is over, you're going into the real things. So that's kind of what the piece is and what they're basically doing. And that's one of the things that is interesting right now, that we are seeing that not the companies, sorry, that the countries are doing. And that's kind of exciting piece for me, because it leads me to believe that my crazy predictions and thoughts are not necessarily completely off shade. Pun intended, probably. I didn't think of it, but it just came off that way. All right. Here we go. An ex-Goldman Sachs exec thinks Ethereum is on the verge of outpacing Bitcoin. Could it be? Could it be? Let's talk about it. Now, of course, we've seen that there's some crazy things that have happened with Cardano, Synthetics, Chainlink, and Dogecoin or Dogecoin. How do you say it? I don't know. Let me know. How do you pronounce it? I've been calling it Dogecoin for forever. Maybe I'm wrong. So let me know in the chat. Let me know in the comments, please. Thank you. But anyways, this one over here is interesting because if you haven't been watching and paying attention, apparently there is a hashtag of on TikTok, basically enticing kids to go out there and buy Dogecoin or Dogecoin, and to basically push it to $1. And so this puppy has actually been pumping, and you'll see it in a moment. But it's one of those things that is interesting. There's nothing behind this project. It was created as a joke just to see how easy it is to create it. Back in 2016, 2017, whatever, it pumped quite nicely. And now everybody's kind of jumping in, and people are getting stupid crazy about it. It's sort of like hurts when it went to 56 cents, and then Robinhood Army jumped in. So maybe we can call these folks a TikTok army, and a TikTok army is on the verge to pump this. So there you go. That's an interesting piece, but it does teach us an important lesson of the importance of network and the importance of what social media can and has the potential to do. It can pump and dump small projects very easily, so you got to be careful when you jump in and out of these. Yet there's a number of proponent analysts from both Wall Street and the crypto space that see ETH can soon be outperforming BTC, Bitcoin. Sorry. Latest to throw his weight behind his sentiment is Raoul Pal. And you may know of Raoul Pal. He was a hedge fund sales head of hedge fund sales for Goldman Sachs, and he does the macro voices as well as Real Vision and channel and so on. So he basically said that there is a good likelihood that ETH is going to be the initial outperformer of the upcoming Bitcoin bull cycle. So there's a bunch of us that are expecting that Bitcoin is going to see, not just Bitcoin, but cryptocurrencies as a whole are going to see another bull run in the upcoming months and years. And he is one of them. And what he's basically saying is that I think he's very much a Bitcoin maximalist to a degree. But what he's saying is that he thinks that ETH is going to go first and is going to hit the ground running first. And he basically shared the chart below. So this chart right over here that is showing the ratio between Ethereum and Bitcoin undergoing a full bull breakout after a 2-year bear market. And you can see that he basically took the X. All right, I don't know what he took. I'm gonna have to take a look at these things because this is on Bloomberg chart, and it's Ethereum to Bitcoin ratio. Okay, so all right, so thank you for explaining down here because I was looking, I was like, I don't know what these stand for, and he basically looked at it, and you can see that it's getting a bit less volatile, it's calming down, and he took the triangle pattern, and what you may not be able to see here, I can't, let me see if I can make this a little bit bigger for you. Nope, it's not doing anything. But you can see right over here how it's breaking above this green line, right? Which is sort of the ceiling or the resistance. Anyways, then we said that Paul identified decentralized finance, better known as DeFi, as one of the reasons why he thinks Ethereum as a platform will perform so well in the future. And that is exactly my reason as to why I am so bullish on ETH, because of the potential that it has when it comes to all of these decentralized uh, uh, applications and networks and finance that is all built on top of it. And we're going to talk a bit more about all of those pieces in a moment before the end of the show. We'll cover all of it. But that is the reason why I too am very, very bullish on Ethereum as a network and ETH as a crypto that backs the entire thing. And we talked about the fact that it is connected to the gas, which is then connected to smart contracts, and smart contracts live on Ethereum. And smart contract is what's used into decentralized finance and the dApps and that entire world that has been booming, booming, booming. Peter Brandt shared the chart below on July 8th, also indicating that the altcoin will gain against the BTC. And so he is sharing his chart as well and analyzing it. And he's basically saying that there is a significant breakout supportive of the upside. Now, Brandt once said that 99% of the other cryptos will be forgotten 5 years from now, but Litecoin and Ethereum have far more going for them. Then we have Tor Demister, the CEO of Adamant Capital, and someone who would dub a toxic Bitcoin maximalist. And he also on July 8th said that ETHBTC, Ethereum, Bitcoin technicals are looking bullish, so I am long. Basically saying, I know I am a Bitcoin maximalist, but baby, Ethereum could make money, so I am jumping in. Very interesting, very, very interesting how people will quickly change their minds when they can actually learn a little bit more, explore a little bit more, and see the potential that things have, and sort of say, maybe I should take a bite of that apple, forbidden or not. And it's not forbidden right now, at least most places. But of course, we do know that some of the places do forbid official crypto world. But whenever there's official, there is the unofficial market as well. Now, as promised, here is what triggered parabolic surges in Cardano, Kyber Network, and Matic. And all of these things, I believe, no, not all of them, sorry, but many of these things do live on Ethereum blockchain. Many cryptocurrencies have gone parabolic over recent weeks. Cardano, which a coin is ADA or ADA, depending on how you say it, which has rallied in excess of 600% since March. And you can see the chart over here. Of course, it has come down since then a little bit, but it's going back up. Other example is Kyber Network. The altcoin is up by 200% in the past 3 months. And we actually talked a lot about Kyber Network last weekend, I want to say. So there is a video for that. If you don't understand why I am quite excited about KNC, Kyber Network Crystal, not coin, you definitely want to watch that video and be able to learn about it. But we covered it a great deal. And so as you can see, it has been doing really, really well. And it has the potential to do incredibly well in the future as well. Then according to crypto research data from Messari, the driving form is much of the altcoin market right now over the past year is staking. There's a reason for it. Now, the way in which staking is implemented differs from blockchain to blockchain and protocol to protocol, but the gist of the concept is as follows. Users can lock cryptocurrency into smart contracts, then receive returns for keeping those assets there. As I always like to say, staking is sort of like a crypto version of a savings account, or actually CD would be a much better thing. When you go in and you get into the CD, right, you lock up your funds, the bank can then use it, the network can use it, and you get some sort of return for locking up your funds. Staking basically does the same thing, except they don't call it a CD, they call it staking. You go in, you get into the project, you lock it up with the smart contract, so it's kind of like buying a CD, and then for that staking, you get a return, and you get basically a reward for doing that thing. That's basically what staking is. All right, so now they said that they shared a chart on July 10th showing that many cryptocurrencies that were staking strongly outperformed the 3 month preceding the launch in technology. So Elrond, ERD, rallied 639%. Okay. Zilliqa rallied 432%. Kyber Network up 206%. Cardano up 175%. Matic Network up 79%. And 0%. And that's a very interesting piece, personally speaking. Now, recently launched staking is Synthetics and Harmony, and of course, both rallied strongly after that staking systems were activated. The extremely strong performance of crypto assets activating staking can be attributed to investors seeking yield. Of course, there's not much yield happening anywhere. Not in stocks, not in bonds, not in CDs, not in savings. And of course, you can make money in stocks, but it's super risky given the underlying economic outlooks that we are in. The bonds also have quite a bit of risk because money has been printing so much, and so there's an uncertainty there as well. So there's a problem with that. You can get into gold, but you don't necessarily get a dividend from it. So you're not getting yield per se in that regard. And so folks are searching for yields, which is why we're seeing this sort of crypto savings account, crypto seeding account called staking, starting to perform really, really well. Now, Ethereum is to follow suit. Now, there are countless of other crypto projects are working on staking technologies, and the most notable of these is Ethereum. And it's an upgrade dubbed Ethereum 2.0. And the introduction of staking will spur a massive Ethereum bull run, and but however, there's a little bit of problems happening. We just talked about some of the problems with the prices on ETH, and that there's a reveal that Ethereum 2.0 was scheduled to come out in third quarter of 2020. There was an announcement or a leak potentially that it's not going to come until early 2021. However, apparently Vitalik actually came on and said, no, 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 we are still coming out this fall. Don't give up on us. So we'll see what happens, but it is coming. We just don't know exactly when. So it could be in the third quarter of 2020, it could be in the fourth quarter of 2020, or it could be sometimes in 2021. Nonetheless, it is coming, and here is the story. Aside from, right, we talked about the fact that a lot of the altcoins and stablecoins are built on Ethereum network. That's what gives it a lot of value. We talked about the fact that staking is what pushes more people into it and rises in the value as well. And now we're saying, hey, ETH is going to offer staking when Ethereum 2.0 rolls out. So now let's go in and talk about that component. Now, analysts believe that Ethereum 2.0 will bring the largest economic shift in crypto. And here is basically what they're talking. Ethereum's economic policy will result in reduced supply and drastically increased demand due to the attractive incentives from staking. And basically saying that 3 to 5% yearly returns on staking would make Ethereum attractive to large investors. And of course they would, because if you have something that has a very high potential that is going to stay, relatively speaking, stable or potentially grow in value, then getting 3 to 5% is perfectly acceptable return. It's not wild, it's not crazy, but saving accounts and CDs were not wild and crazy. They did offer about 5% return, which was quite lovely to put in some money there. So it's going to become very, very attractive for large investors. In order to push down staking rewards so that a range to that range between 10 and 30 million ETH would need to be locked into ETH 2.0 validators, which represents 10 to 30% of the coin's total circulating supply. Now, this basically, the locking up so much of the supply will create a supply shock, which, of course, with scarcity, the prices will actually go up. They go up because if you have a supply go down, demand stays the same or potentially goes up, the price has to go up. Basic economic principle. Price spike will push those same investors into buying more ETH in order to stake more of it, which would in turn create a ripple effect causing a general market upturn. Of course, it makes sense. As the price goes up, more people want to go in it. They lock it up. As more of them lock it up and more of them get it, more ETH gets locked up away, creating even less supply, even more demand. Price goes up, more people FOMO in, and of course, that is going to drive it up, parabolic move. However, once we see the parabolic move, this is my sort of professional and personal opinion and thinking. Once we go see that, it will eventually have to kind of come down. It probably won't come down to the same levels that we're here, but it will. So once it kind of shoots on up, it will have to come down and fill in that gap before it can continue to rally up. So we will see a very, very massive, potentially very, very massive, very high performing price moves inside ETH. Now, unlike the bull run of 2017, this one will happen much faster as there are far more fiat on-ramps available and hundreds of millions of verified users on major exchanges. And I'm going to add and point out, aside from more on-ramps, more users, there's also more fiat that has been printed that allows for more fiat to actually go into the crypto. So expect that as well. Besides staking, Ethereum 2.0 will bring about scalability, allowing dApps to build on networks to handle more users and increase their consumer viability. With more applications available, the network is set to see a significant uptick in users. And dApps, for those of you that don't know, are decentralized apps that are all built on Ethereum network. Well, predominantly built on Ethereum network using Ethereum network's smart contracts that require gas, that require ETH. So you can see where this is going. However, this can't go on forever, and more nodes on the network will cause the overall payout everyone to be lower. So, in order to continue earning, and we just talked about that stuff, but people will kind of try to do stuff. So, in order to continue earning at the same rate as before, whales, meaning large investors, would not only have to buy more ETH, but also stake more ETH to buy that they buy. Now, of course, the Ethereum has a very complex monetary policy, not military. U.S. has complex military policy. Ethereum has complex monetary policy, and comes into the place. It dictates that ethers can be staked. It can't be staked in a fraction, but rather in allotment of 32. So the minimum amount of ETH that you can stake, that you can lock up, is 32. Well, guess what? That means that if you want to stake, you have to accumulate 32 ETH and then stake it to be able to continue to make money passively, that passive income from putting it into the uh, um, blockchain's CD. And so that's the reason why I believe that the price of ETH has also been pumping, because I think a lot of folks are trying to get up to 32. So when ETH 2.0 rolls out, they can actually get into the network, stake it, and then be able to benefit from it. So that's kind of the piece what we have happening. And if we're thinking about and talking about the staking and the fact that you have to have 32 and the price is at 240, that basically means that you have to invest a minimum of $7,680 as of the price today in order to benefit from this. So that's kind of what we're going to see some of the folks potentially not be able to benefit as much. But nonetheless, I do believe that the price of ETH will go up. Now, of course, they're talking about there's going to be changes in gas fees on the network. There was an improvement proposal made by Vitalik, which is who kind of started the whole Ethereum piece. And implementing the proposal means that all of the transaction fees will be burned, with miners profiting only from the tips users choose to pay alongside a base fee set up by the network. So they're looking to kind of change this whole gas structure piece, that instead of just getting gas for it, that they would be sort of a base fee. This is kind of what it is. And then you end up tipping the miners. And I think that that is going to be an interesting piece. So if you want your transaction to go super fast, you tip a bit more. If you don't care, you tip a little bit less. But that's very similar to what you do with gas fees now. I mean, the gas prices. The gas is set, but the gas price is not. And so in your smart contract, you can actually set your own gas fee of like how much you want to pay for gas. And, the more you pay, the faster you get picked up by the miners and the faster the thing processes. And the less you pay, you could be sitting there for days waiting for your contract, waiting for your thing to be picked up. And that's one of the potentially big problems that is happening right now. But we're in early stages, and those are expected to happen and to come. But I think in the long term, those pieces will be configured, and I think that that is going to be resolved. So, burning of the fees, of the base fees, could result in around 10,000 ETH lost from the supply, but that number is expected to increase significantly as number of users on the network grows. Number of ETH burned each year will exceed the number of ETH issued and lower the overall supply. Again, you have people staking, things being burned, less supply, less supply, less supply, more demand, more demand, more demand. You put those things together and you can see how ETH can actually go to the moon. Okay, it's not going to go literally to the moon, but you can see how the price could be parabolic, move on up. It is worth noting that Ethereum 2.0 could take years to develop in full, and so it is something to fully understand and pay attention to. And that is one of the reasons why I always keep on saying you absolutely, definitely, completely want to be in crypto on the long run. You don't want to chase the rallies. You don't want to deal with that kind of stuff, but you do want to take a look at the projects and propositions and what is possible, what is happening, to understand, does it make sense for me to go in right now, right? Many people will wait for something like ETH to go back up to, $1,200 or $2,000 or $15,000 or however the price is going to be, and then FOMO in. But that is going to be the top of the market, and the only way at that point is down. Just like we saw with people in 2017 when they were jumping in a Bitcoin at $20,000 at the top of the market and then exited at $3,000 when they should be actually getting in. So it's a similar thing now with ETH. You could wait potentially. You could go in. I'm not giving financial advice whatsoever. You should or you shouldn't do. I am giving advice that you should educate yourself, continue to learn about the projects, what they do, what the developments are, and start using things that you're learning here on this channel that are going to help you decide, does this have a potential to actually do stuff, and is the adoption going up or down? What is happening with the volume? Don't just focus on the price. Price is just one small component of the whole thing. You got to focus on what's fundamentals behind the project. You want to focus, are people going in? Are they building on top of it? What is happening with the overall ecosystem, so to speak, to have an understanding of where could this potentially go? And then if it sounds like something that you're like, wait a minute, I could see the future here, then you DCA into it, meaning dollar cost average. You put in a little bit every so often. Regularly, you put a little bit into it, and who knows, you might acquire just enough that when the price goes parabolic, then you set up a bit of the exit strategy or what else you could do so that you are moving your money, because it is velocity of money that makes it grow. And there we go. That's the end of the show today. Hopefully you have enjoyed it. Again, if you're watching this on YouTube, do me a favor, hit the like button right now. Help me out, please, and thank you. Do subscribe if you like the content. Do hit the bell button, and you'll get notified every single day that video shows up in the YouTube feed. If you're watching this live on onedealaway.com, we are going to go into the chat right now. Until tomorrow, y'all. Thank you for watching. Stay forever money blessed. And do remember, you are only one deal away.